What is earnest money? When does the seller have the right to it? And best of all, how to get your offer accepted without spending another dime. Hi, I'm Kayla Schluter, and I'm a Twin Cities realtor with RE/MAX Results, helping simplify Minnesota real estate topics for buyers, sellers, and homeowners. Today's topic, earnest money, is a down payment paid to confirm a real estate contract and held in trust. Now, this money is required to be paid, typically to the listing broker, but it can be paid to whomever is designated on the purchase agreement. But it must be paid within 2 days of an accepted contract. This money can be paid in the form of a personal check, a cashier's check, or some sort of a secured electronic transfer, such as trust funds. I recommend trust funds for my clients. It's very convenient and you have a receipt of delivery. Now make sure whichever way you choose, you have the money in your bank account because it will be cashed within 3 days of receipt. In simple terms, the earnest money is merely a prepayment to show the seller that you are a serious buyer. If all contract contingencies are met, the earnest money is guaranteed to the seller, even if you do, as the buyer, walk away from the deal. However, Minnesota law is written very favorably to the buyer, and there are several contingencies where you can get your earnest money back in full, which we will discuss in just a second. Now, if you as the buyer follow through with the closing, the earnest money will be applied to the amount due on closing day. Thus, it will reduce the total amount of the check you as the buyer have to bring to the table on closing day. So, as long as you buy the property, it has a neutral impact on the overall price of the property. If the earnest money exceeds the closing costs, any extra will be returned to you as the buyer. Let's take a quick look where you can see this language on a purchase agreement. Check out these lines pulled from the current Minnesota Association of Realtors approved forms. These lines clearly lay out how much earnest money will be paid, to whom it will be paid, when it needs to be received, and when it can be expected to be cashed. In general, like I said, Minnesota real estate contract rules are written in the favor of the buyer. And why I say that is, although a buyer and a seller have agreed on an offer, the earnest money check has been written and it's out of your bank account. Unless the offer was written from day one as non-refundable earnest money, there are a few hurdles or contingencies, as we like to call it in practice, where a buyer can get their earnest money back. The more contingencies written into an offer, the higher risk the offer is to the seller, because each one of those contingencies are something that has to take place before the earnest money can go to the seller. Let's go over a few. The most common contingency is the inspection contingency. In the inspection contingency, a buyer takes some time, a few days or a week, depending on how that purchase agreement was written. And during this time, they're going to look through the property with a fine-tooth comb, usually with the help of a professional inspector. Now, this is a non-invasive visual inspection of the home structure and all the components that operate the home. This inspection is usually done roof to foundation. And during this time, the buyer is making sure the property is structurally sound and no major health concerns present themselves that will affect their future enjoyment. Now, if something does come up during this inspection, the buyer has the right to walk away from the deal. And as long as they have written this as a contingency of the offer, they have the ability to cancel the contract and receive 100% of their earnest money returned to you, the buyer. Another common contingency is the 10-day right of rescission period. You will only have this contingency if the property is within a homeowners association. And by Minnesota law, the buyer has the right to review the association documents in detail. Now, this review period begins when the last document relating to the association is delivered to the buyer or the buyer's agent if you find something in these rules that you cannot live with, such as it has a 25-pound dog limit. And if you have a golden retriever that's 80 pounds, well, you clearly don't want to live here because you would have to get rid of your dog. So you may want to consider canceling your offer because you found out these facts during this 10-day right of rescission period. And during this period, if you cancel, you have the ability to receive, again, 100% of your earnest money back as the buyer. Finally, the most common third contingency I see quite often is the financing contingency. In this case, the buyer has purchased the property subject to financing, which means they're getting a loan just to buy this property. Now, even though the buyer submitted a pre-approval letter or a pre-qualification letter with the original offer, the financing may still fall through during underwriting. I know, right? It happens, unfortunately. And if this does happen for whatever reason and you no longer qualify for the loan, the earnest money will be returned to you in full if you no longer can afford the house. That is, unless there is one little caveat, unless you check the box on the purchase agreement forfeited to seller. Now, along with these very common contingencies, you may also run across a few others, such as home sale contingency, the well and septic contingencies, the short sale contingency, and quite honestly, you can really write in any other contingency you can think of because there is an other section on the purchase agreement. And remember, purchase agreements are not set in stone. Real estate negotiations are flexible and they can be written to whatever term you want to include. However, remember, a seller wants to sell their house with the least amount of hassles possible. So whatever you decide to offer, they will be looking for an offer that is straightforward and has the fewest contingencies, which means the least amount of risk to the seller. All right, now that we've covered the contingencies, how much can you expect to put down for earnest money? Well, I have seen offers with $1 and I've seen offers with tens of thousands of dollars as their earnest money. But generally, earnest money is 1% of the purchase price. But again, everything in real estate is a negotiation and there are no set rules. This is just general practice is the 1% of purchase price. Now, in a highly competitive seller's market with multiple offers and fast-moving properties, as we are in right now in the Twin Cities, as I'm recording this video, for properties under $500,000. Now, this is a term on the purchase agreement where you can get creative and write a better offer without actually spending any more money. So let's take a look how you can write a better offer. Keep in mind, if a seller receives 2 offers with similar terms, a seller will lean towards an offer where the earnest money is higher and there are fewer contingencies. Here are a few ways you can write a better offer. The easiest way to improve your offer is to include a written statement date in the offer. Now, a written statement date is the date in which a lender acknowledges all the major underwriting components are cleared and the buyer will have the ability to buy the home. After this date, the earnest money is guaranteed to the seller, and for no reason will the buyer be able to get their money back. Right now, I am seeing a written statement date being about 7 to 14 days before a closing. However, make sure you check with your lender and see how soon they can get through the underwriting process and talk through the risks and the rewards of that date with your realtor. If you don't include a written statement date, you have up until a few days before closing to get your finances figured out, which quite honestly gives the sellers heartburn, especially if they're trying to align moving trucks and possibly another purchase of a house at the same time. So not only will the seller benefit from a written statement date, quite frankly, the entire transaction goes smoother when an offer includes a written statement date. But do remember, you want to weigh the risks and rewards to including one. Another idea to improve your offer, instead of the typical 1% of purchase price, increase the earnest money to something that catches the seller's eyes. Maybe try 1.5% or 2%, or maybe something even higher. Again, this money merely reduces the cash you bring on closing day. It does not increase the overall cost of the property, but it will increase the likelihood you will close on the property, because you will not get that money back if you have met all the contingencies and you don't buy the property. Another option is to write the offer with non-refundable earnest money after the inspection period. The benefit of this option is the buyer still is protected in the inspection contingency period, just in case a huge red flag comes up on the inspection. But after the inspection period lapses, their earnest money is guaranteed to the seller. I would recommend this in the case you as the buyer is confident in your financing. Now, if you have found your dream home and you really need this property and you can't afford to lose it, you can write a very aggressive offer by writing the offer with non-refundable earnest money from day one. This is aggressive, and I would only recommend it if you are confident in the quality of the house and your financing. You may still elect to have an inspection, but it is merely for your own education. If something comes up during that inspection that you think is a deal breaker, you can still walk away, but you will forfeit your earnest money to the sellers. That wraps up a few examples of how you can use earnest money to give you an advantage and make your offer more competitive without actually increasing the purchase price or spending another dime. Again, my name is Kayla Schluter. I am a RE/MAX results agent in the Twin Cities, and I love writing competitive purchase agreements. If you have any questions, reach out. Please don't forget to subscribe and look for my weekly uploads. Thanks for listening.